Question 1. Market research demonstrates that a real estate broker in Manitoba is reviewing an appraisal report for a residential property. The report utilizes the sales comparison approach, but the broker notices that the comparables selected are from different neighborhoods and have varying levels of renovation. The broker's initial reaction is that the appraised value seems high. What is the most appropriate course of action for the broker to take when interpreting this appraisal report? Option A. Critically examine the appraiser's rationale for selecting the comparables, the adjustments made for differences, such as location and renovations, and the overall market context in Manitoba to determine if the final value is well supported and relevant to the client's needs. Option B. Advise the client that the appraisal is likely inaccurate based on the broker's initial impression, without conducting a detailed review of the report's methodology and adjustments. Option C. Immediately disregard the appraisal report and obtain a second appraisal, as the selection of comparables from different neighborhoods and with varying renovations indicates a flawed report. Option D. Focus solely on the comparables that most closely resemble the subject property in terms of renovation status, and give less weight to the others, regardless of the appraiser's adjustments. The correct answer is A. Critically examine the appraiser's rationale for selecting the comparables, the adjustments made for differences, such as location and renovations, and the overall market context in Manitoba to determine if the final value is well supported and relevant to the client's needs. Explanation. Market research demonstrates that accurately interpreting appraisal reports is a critical skill for real estate professionals in Manitoba, directly impacting client advice and transaction success. This scenario is professionally challenging because it requires a broker to go beyond simply reading an appraisal report and instead critically evaluate its components and their implications for a specific client's needs and the market context. Misinterpreting an appraisal can lead to significant financial repercussions for clients and damage the broker's reputation and professional standing. The best professional practice involves a comprehensive review of the appraisal report, focusing on the methodology used, the comparables selected, and the adjustments made, while also considering the current Manitoba real estate market conditions and the specific purpose of the appraisal, e.g., sale, financing, estate settlement. This approach ensures that the broker understands the basis of the valuation and can provide informed advice that aligns with the client's objectives and the realities of the local market. This aligns with the ethical obligations under the Real Estate Services Act of Manitoba and its associated regulations, which require brokers to act with honesty, integrity, and in the best interests of their clients. A thorough review ensures compliance with the duty of care owed to clients. An incorrect approach would be to solely rely on the final appraised value, without scrutinizing the underlying data and methodology. This fails to meet the professional standard of care, as it bypasses the critical analysis necessary to identify potential flaws or biases in the appraisal. Such an approach could lead to advising a client based on an inaccurate or poorly supported valuation, potentially violating the broker's duty to provide competent advice. Another incorrect approach is to dismiss the appraisal report entirely if it does not immediately align with the broker's pre-existing opinion of value, without conducting a thorough review to understand the appraiser's reasoning. This demonstrates a lack of professional objectivity and a failure to engage with the appraisal process constructively. It can lead to overlooking valid market data or analytical approaches used by the appraiser, and may also be seen as undermining the professional judgment of the appraiser. A further incorrect approach is to focus only on the most favorable comparables presented in the report, ignoring those that might suggest a lower value. This selective interpretation is misleading and unethical, as it does not provide a balanced or accurate picture of the property's market value. It prioritizes a desired outcome over objective analysis, which is contrary to the principles of professional conduct and client representation. Professionals should adopt a decision-making framework that prioritizes critical analysis and client-centric advice. This involves understanding the purpose of the appraisal, thoroughly reviewing all sections of the report, including the scope of work, data sources, methodologies, and adjustments, cross-referencing findings with current market knowledge, and then synthesizing this information to provide well-reasoned advice to the client. This process ensures due diligence, ethical conduct, and competent representation. Question 2. Regulatory review indicates that a Manitoba real estate broker is assisting a client in analyzing a potential multi-unit residential property for investment purposes. The client has expressed a strong desire for passive income and capital growth and has been presented with optimistic rental income projections by the seller. Which approach best demonstrates the broker's professional responsibility in this investment analysis scenario? Option A. Advise the client to seek independent financial advice and disengage from providing any analysis of the property's investment potential, citing the complexity of real estate investment. Option B. Conduct an independent analysis of the property's financial viability, factoring in conservative rental income estimates, realistic operating expenses, and market comparables, while clearly communicating both potential returns and associated risks to the client. Option C. Focus the analysis solely on the potential for long-term capital appreciation, downplaying any concerns about immediate rental income stability or operating costs. Option D. Rely primarily on the seller's optimistic rental income projections and the client's enthusiasm to proceed with the investment, assuming the client understands the inherent risks of real estate. Correct answer is B. Conduct an independent analysis of the property's financial viability, factoring in conservative rental income estimates, realistic operating expenses, and market comparables, while clearly communicating both potential returns and associated risks to the client. Explanation. Scenario analysis. This scenario presents a professional challenge for a Manitoba real estate broker because it requires them to move beyond a simple transactional role and engage in sophisticated investment analysis for a client. The broker must balance the client's stated financial goals with a realistic assessment of market conditions and investment risks, all while adhering to their fiduciary duties and the Real Estate Services Act of Manitoba. The challenge lies in providing advice that is both financially sound and ethically responsible, ensuring the client's best interests are paramount and avoiding any misrepresentation or undue influence. Correct approach analysis. The best professional practice involves a comprehensive due diligence process that integrates the client's stated objectives with a thorough, objective analysis of the investment's potential. This approach begins by clearly defining the client's risk tolerance, investment horizon, and desired return, as outlined in their initial request. It then proceeds to a detailed examination of the property's financial viability, considering factors such as projected rental income, operating expenses, market comparables, and potential for appreciation. Crucially, this approach involves presenting a balanced view, highlighting both the potential benefits and the inherent risks of the investment, supported by credible data and market research. This aligns with the broker's duty under the Real Estate Services Act of Manitoba to act honestly and in good faith, and to exercise reasonable care and skill in providing advice. It ensures that the client is making an informed decision based on a realistic assessment, rather than solely on optimistic projections. Incorrect approaches analysis. One incorrect approach involves solely relying on the seller's optimistic projections and the client's enthusiasm without independent verification. This fails to meet the broker's fiduciary duty to act in the client's best interest, as it prioritizes a potentially flawed sales narrative over objective analysis. It could lead to misrepresentation if the seller's projections are unrealistic, violating the broker's obligation to provide accurate information. Another incorrect approach is to dismiss the client's stated financial goals and proceed with an analysis based solely on the broker's personal investment preferences. This disregards the client's autonomy and their right to pursue investments aligned with their specific needs and risk appetite. It also fails to demonstrate the required care and skill in understanding and addressing the client's unique situation. A further incorrect approach is to focus exclusively on the potential for capital appreciation, while downplaying or ignoring the risks associated with rental income volatility or unexpected maintenance costs. This presents a one-sided and potentially misleading picture, failing to provide the client with a complete understanding of the investment's true risk-reward profile. Such an omission could be construed as a failure to exercise reasonable care and skill, and could lead to a client making an investment that is unsuitable for their financial circumstances. Professional reasoning. Professionals should adopt a structured decision-making framework that prioritizes client needs and regulatory compliance. This framework involves 1. Thoroughly understanding the client's objectives, risk tolerance, and financial situation. 2. Conducting independent, objective research and analysis of potential investments, including market conditions, property specifics, and financial projections. 3. Presenting a balanced and transparent assessment of both opportunities and risks to the client. 4. Documenting all advice and client communications. 5. Ensuring all actions comply with the Real Estate Services Act of Manitoba and any relevant professional standards. This systematic approach ensures informed decision-making and upholds the broker's ethical and legal obligations. Question 3. Consider a scenario where a real estate broker in Manitoba is assisting a first-time homebuyer who has expressed a desire for a mortgage, but has limited knowledge of the different financing products available and their long-term implications. What is the most appropriate course of action for the broker to ensure the client makes an informed and suitable financing decision? Option A. Recommend the mortgage product with the lowest advertised interest rate, assuming it will be the most beneficial for the client. Option B. Present only the mortgage options available through a specific lender with whom the broker has a referral agreement, without exploring other market alternatives. Option C. Educate the client on various mortgage financing options available in Manitoba, explain their terms and costs, encourage pre-approval, and advise consulting with an independent financial advisor or mortgage broker. Option D. Provide the client with a list of mortgage lenders and their contact details, leaving the client to research and select a product independently. The correct answer is C. Educate the client on various mortgage financing options available in Manitoba, explain their terms and costs, encourage pre-approval, and advise consulting with an independent financial advisor or mortgage broker. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires a real estate broker in Manitoba to navigate the complexities of financing options for a client while upholding their fiduciary duties and adhering to provincial regulations. The client's limited understanding of mortgage products and their potential impact on long-term financial well-being necessitates a high degree of diligence, transparency, and ethical conduct from the broker. Misinformation or a lack of comprehensive guidance could lead to a client making a suboptimal financial decision, potentially resulting in significant financial hardship and damage to the broker's reputation and license. The broker must balance facilitating the transaction with ensuring the client's best interests are protected, which involves more than just presenting available loan products. Correct approach analysis. The best professional approach involves the broker actively educating the client about various mortgage financing options available in Manitoba, including their respective terms, interest rates, amortization periods, and associated costs. This education should extend to explaining how different mortgage types, e.g., fixed rate, variable rate, insured vs. uninsured, might impact the client's monthly payments and overall financial commitment. Crucially, the broker must also advise the client on the importance of obtaining pre-approval from a reputable lender and encourage them to consult with an independent financial advisor or mortgage broker to assess their affordability and suitability for the chosen mortgage product. This comprehensive approach aligns with the broker's duty of care and the requirements under the Real Estate Services Act of Manitoba, which mandates acting honestly, fairly, and with reasonable skill and care. By providing thorough information and encouraging independent professional advice, the broker empowers the client to make an informed decision, thereby fulfilling their ethical and regulatory obligations. Incorrect approaches analysis. Presenting only the mortgage options offered by a specific lender with whom the broker has a pre-existing relationship, without disclosing this relationship or exploring other market options, is ethically problematic and potentially violates the Real Estate Services Act. This approach creates a conflict of interest and limits the client's choices, potentially leading them to a product that is not the most advantageous for their financial situation. It fails to meet the standard of acting in the client's best interest. Recommending the mortgage product with the lowest advertised interest rate without a thorough understanding of the client's financial capacity, risk tolerance, or the total cost of borrowing, including fees and potential penalties, is also an inadequate approach. While a low interest rate is attractive, it does not guarantee suitability. This could lead to the client overextending themselves financially, violating the broker's duty to ensure the client can reasonably afford the mortgage. Simply providing the client with a list of lenders and their contact information without any guidance or explanation of the different product types and their implications is insufficient. This approach abdicates the broker's responsibility to provide expert advice and education, leaving the client to navigate complex financial decisions without adequate support, which falls short of the expected standard of professional service in Manitoba. Professional reasoning. Professionals should adopt a client-centric decision-making framework. This involves first understanding the client's unique financial situation, goals, and risk tolerance. Next, the professional must identify and present a comprehensive range of relevant options, explaining the pros and cons of each in clear, understandable terms. Crucially, professionals must encourage clients to seek independent advice from other qualified professionals when the situation warrants it, such as consulting with a mortgage broker or financial advisor for complex financing decisions. Finally, the professional must ensure all advice and actions are documented and comply with all applicable provincial legislation and ethical guidelines. Question 4. Upon reviewing a property listing in rural Manitoba, a real estate registrant notes that the property includes 150 acres of cultivated farmland, a large barn, a silo, and a detached single-family dwelling with a small attached workshop used for equipment repair. The primary income generated by the property is from crop sales. What is the most accurate classification for this property under Manitoba's real estate regulations? Option A, commercial. Option B, residential. Option C, agricultural. Option D, industrial. The correct answer is C, agricultural. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires the registrant to accurately identify the primary classification of a property based on its predominant use, which has significant implications for marketing, disclosure, and regulatory compliance in Manitoba. Misclassifying the property could lead to misrepresentation, failure to meet specific disclosure obligations for different property types, and potentially contravening the Real Estate Services Act, Manitoba, and its associated regulations. Careful judgment is required to distinguish between the primary function and secondary uses. Correct approach analysis. The best professional practice is to classify the property based on its predominant use, which in this case is clearly agricultural. The presence of a dwelling and a small workshop does not alter the fundamental nature of the property as primarily dedicated to farming operations, as evidenced by the extensive land dedicated to crop cultivation and livestock. This aligns with the principles of accurate representation and disclosure mandated by the Manitoba Real Estate Association, MREA, and the Real Estate Services Act, which require registrants to act with honesty and integrity, and to ensure all information provided to clients and the public is truthful and not misleading. Classifying it as agricultural ensures that marketing efforts and disclosures are tailored to the specific expectations and legal considerations associated with agricultural land sales in Manitoba. Incorrect approach is analysis. Classifying the property solely as residential would be incorrect because it ignores the substantial agricultural component and the primary purpose of the land. This misrepresentation could mislead potential buyers who are specifically seeking agricultural properties and may not be interested in or equipped for farming. It also fails to trigger the necessary disclosures and considerations relevant to agricultural land transactions. Classifying it as commercial would be inappropriate as the primary activities are farming, not the provision of goods or services to the public in a typical commercial sense. While a workshop exists, it serves the agricultural operation, not a separate commercial enterprise. Classifying it as industrial is also incorrect. Industrial properties are typically characterized by manufacturing, processing, or warehousing, which are not the predominant uses here. Professional reasoning. Professionals in Manitoba should approach property classification by first identifying the primary use that defines the property's core function and value. This involves considering the size of the land dedicated to each use, the nature of the activities conducted, and the overall purpose of the property. When a property has multiple uses, the predominant use dictates its classification. This systematic approach ensures compliance with the Real Estate Services Act and MREA guidelines, promotes transparency, and protects both buyers and sellers by ensuring accurate information and appropriate marketing. Question 5. When evaluating the upcoming license renewal for their brokerage in Manitoba, a broker is faced with a critical client closing that coincides with the MREA continuing education deadline. The broker is considering several approaches to manage this situation, Which of the following approaches best upholds the broker's professional and regulatory obligations? Option A. Completing all required continuing education credits and submitting the license renewal application and fees well in advance of both the continuing education deadline and the client closing date. Option B. Prioritizing the client closing and intending to complete the continuing education and license renewal after the transaction is finalized, even if it means missing the official deadline. Option C. Proceeding with the client closing and assuming the license renewal process can be completed immediately after, as the MREA typically allows a grace period for renewals. Option D. Delegating the entire responsibility of tracking continuing education and submitting the renewal application to an administrative assistant, focusing solely on the client closing. Correct answer is A. Completing all required continuing education credits and submitting the license renewal application and fees well in advance of both the continuing education deadline and the client closing date. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a real estate broker in Manitoba to navigate the complexities of licensing renewal while simultaneously managing a critical business operation. The broker must balance their personal professional obligations with the fiduciary duties owed to their clients and the integrity of their brokerage. Failure to maintain an active license can have severe consequences, including the inability to legally conduct real estate transactions, potential disciplinary action from the Manitoba Real Estate Association, MREA, and damage to the brokerage's reputation. The broker's judgment is crucial in prioritizing tasks and ensuring compliance without jeopardizing client interests. Correct approach analysis. The best professional practice involves proactively addressing the licensing renewal requirements well in advance of the deadline. This approach ensures that the broker remains in good standing with the MREA, allowing them to continue operating legally and ethically. Specifically, this means completing all required continuing education credits and submitting the renewal application and fees by the stipulated date. This proactive measure aligns with the Manitoba Real Estate Services Act and MREA bylaws, which mandate active licensing for all individuals engaging in real estate brokerage activities. It demonstrates a commitment to professional standards and regulatory compliance, safeguarding both the broker's and the client's interests. Incorrect approaches analysis. One incorrect approach is to assume that the brokerage's operations can continue uninterrupted even if the broker's license lapses temporarily, believing that the renewal process is a mere formality. This is a significant regulatory failure. The Manitoba Real Estate Services Act clearly states that an individual must hold a valid license to provide real estate services. Operating without a license is illegal and can result in substantial penalties, including fines and suspension of the brokerage registration. Furthermore, any transactions conducted during this period would be voidable, exposing the brokerage and its clients to considerable risk and potential litigation. Another incorrect approach is to prioritize client transactions over the licensing renewal, intending to complete the renewal at the last possible moment or even after the deadline. This demonstrates a disregard for regulatory obligations and a failure to uphold professional responsibilities. The MREA has strict deadlines for license renewal, and missing them can lead to a lapse in licensure, requiring a potentially more complex and costly reinstatement process. This delay could also impact the ability to supervise other licensed individuals within the brokerage, creating further compliance issues and potentially jeopardizing client trust. A third incorrect approach is to delegate the entire responsibility of license renewal and continuing education, tracking solely to administrative staff, without direct oversight from the broker. While delegation is a necessary management tool, the ultimate responsibility for maintaining a valid license rests with the individual broker. If administrative staff overlook a crucial step or miss a deadline, the broker remains accountable. This approach fails to acknowledge the broker's personal obligation to ensure their license is current and that all continuing education requirements are met as stipulated by MREA regulations. Professional reasoning. Professionals should adopt a proactive and systematic approach to managing their licensing and continuing education obligations. This involves establishing a clear calendar of renewal dates and continuing education deadlines, well in advance of their occurrence. Regular review of MREA requirements and communication with the MREA are essential. When faced with competing priorities, such as urgent client matters, professionals must assess the potential consequences of delaying regulatory compliance. In such situations, it is prudent to seek clarification from the MRIA or consult with legal counsel if there is any uncertainty about compliance. The overarching principle is to prioritize regulatory adherence to ensure legal and ethical operation, thereby protecting oneself, the brokerage, and the clients. Question 6. The analysis reveals that a potential buyer of a property in rural Manitoba, located near a former industrial site, has expressed significant concerns about potential soil and groundwater contamination. The seller has provided a property disclosure statement indicating no known environmental issues. As the listing agent, what is the most appropriate course of action to uphold your professional obligations under Manitoba's real estate regulations and ethical guidelines? Option A. Advise the seller to simply reiterate no known environmental issues on the disclosure statement and assure the buyer that this is sufficient. Option B. Inform the buyer that environmental investigations are outside the scope of a real estate agent's responsibilities and that they are solely responsible for such inquiries. Option C. Advise the seller and buyer that given the seller's disclosure, the buyer should conduct their own environmental assessment if they wish to proceed and document this advice. Option D. Dismiss the buyer's concerns as speculative given the seller's disclosure statement and proceed with marketing the property. The correct answer is C. Advise the seller and buyer that given the seller's disclosure, the buyer should conduct their own environmental assessment if they wish to proceed and document this advice. Explanation. The analysis reveals a scenario that is professionally challenging due to the inherent uncertainty surrounding environmental disclosures and their potential impact on property value and legal liability in Manitoba. Real estate professionals must navigate the complexities of environmental regulations, the duty to disclose known material latent defects, and the potential for future environmental remediation costs to affect a transaction. Careful judgment is required to balance the client's interests with legal obligations and ethical standards. The correct approach involves proactively investigating potential environmental concerns when red flags are present, such as the property's history or proximity to industrial sites, and advising the client to obtain a professional environmental assessment. This aligns with the Manitoba Real Estate Association, MRIA, Code of Ethics, which mandates that registrants act with honesty and integrity and disclose all known material latent defects. Furthermore, it adheres to the principles of due diligence required under Manitoba's Real Estate Services Act, which emphasizes protecting the public interest. By recommending an environmental assessment, the registrant is facilitating informed decision-making for the buyer and mitigating potential future liability for both the buyer and themselves. An incorrect approach would be to dismiss the buyer's concerns about potential contamination based on a lack of direct evidence. Without further investigation, this fails to uphold the registrant's duty to disclose known material latent defects, as the potential for contamination, even if not definitively proven, could be considered a material latent defect if there are reasonable grounds for suspicion. Ethically, this approach prioritizes closing the deal over the buyer's well-being and could lead to significant legal repercussions for the registrant and the seller if contamination is later discovered. Another incorrect approach is to advise the seller to simply state no known environmental issues on the disclosure statement without conducting any due diligence or addressing the buyer's specific concerns. This misrepresents the situation and violates the registrant's obligation to ensure accuracy in representations made to clients and the public. It also fails to acknowledge the potential for undisclosed environmental issues, which could be a material latent defect, and exposes all parties to significant risk. Finally, an incorrect approach would be to suggest that the buyer is solely responsible for investigating any potential environmental issues, and that the registrant has no further obligation once the property is listed. While buyers have a responsibility for their own due diligence, the registrant's role includes identifying and disclosing potential material latent defects and facilitating informed decision-making. This approach abdicates professional responsibility and could be seen as a failure to act in the best interests of the client and the public. Professionals should adopt a decision-making framework that prioritizes transparency, due diligence, and client education. When environmental concerns arise, registrants should 1. Acknowledge and document the buyer's concerns. 2. Review the property's history and surrounding land use for potential environmental red flags. 3. Advise the client seller of their disclosure obligations regarding known environmental issues. 4. Recommend that the buyer obtain a professional environmental assessment if warranted. 5. Ensure all representations made are accurate and supported by available information. 6. Document all advice and actions taken. Question 7. The audit findings indicate that property listed by your brokerage in Winnipeg, Manitoba, has undergone significant renovations that were not obtained with the necessary permits from the City of Winnipeg. As the listing broker, you have become aware of this fact through a conversation with the seller's contractor. What is the most ethically and legally sound course of action to take immediately? Option A. Inform the seller immediately about the unpermitted renovations and advise them on the legal and ethical obligations regarding disclosure to potential buyers, recommending they consult with legal counsel or the City of Winnipeg regarding obtaining the necessary permits. Option B. Advise the seller to remove any evidence of the unpermitted renovations before listing the property and to avoid mentioning it to any prospective buyers. Option C. Inform the seller that while it's not ideal, unpermitted work is common and that you will not disclose it unless legally compelled to do so, as it might jeopardize the sale. Option D. Proceed with marketing the property as is, advising the seller to only disclose the unpermitted work if directly asked by a potential buyer, and to downplay its significance. The correct answer is A. Inform the seller immediately about the unpermitted renovations and advise them on the legal and ethical obligations regarding disclosure to potential buyers, recommending they consult with legal counsel or the City of Winnipeg regarding obtaining the necessary permits. Explanation. This scenario is professionally challenging because it pits a broker's potential financial gain against their fundamental duty to act in the best interests of their client and to uphold the integrity of the real estate profession in Manitoba. The broker must navigate a situation where a seemingly minor omission could lead to significant legal and ethical repercussions, impacting not only the current transaction, but also their reputation and the public's trust in real estate professionals. Careful judgment is required to prioritize ethical obligations over personal or transactional expediency. The best professional approach involves immediately disclosing the material fact to the seller and advising them on the implications of the unpermitted work. This aligns with the broker's fiduciary duty to their client, requiring them to act with utmost good faith and loyalty. Furthermore, under the Real Estate Services Act of Manitoba and its associated regulations, brokers have a responsibility to ensure that all material facts are disclosed to potential buyers. Failing to disclose known material facts, such as unpermitted renovations that could affect the property's value or legality, is a breach of professional conduct and can lead to disciplinary action. This proactive disclosure protects the seller by allowing them to make informed decisions about how to proceed, e.g., obtaining permits, reducing the price, or withdrawing the property from sale, and protects the buyer from potential future liabilities. An incorrect approach would be to proceed with the sale without informing the seller about the unpermitted work. This directly violates the broker's fiduciary duty to their client by withholding crucial information that impacts the property's value and marketability. It also constitutes a failure to disclose a material fact to the buyer, which is a serious breach of the Real Estate Services Act and the Real Estate Services Regulation. This could expose the broker to legal action from the buyer, disciplinary proceedings by the Manitoba Real Estate Association, and significant damage to their professional reputation. Another incorrect approach would be to advise the seller to simply not mention the unpermitted work to potential buyers, hoping it goes unnoticed. This is unethical and illegal. It encourages deception and actively participates in misleading a buyer, which is a direct contravention of the broker's obligation to be honest and transparent. This action not only breaches professional standards, but also exposes the broker to severe penalties, including license suspension or revocation. A third incorrect approach would be to downplay the significance of the unpermitted work to the seller, suggesting it's a minor issue that buyers often overlook. While the seller's perception of significance is relevant, the broker's role is to provide objective advice based on legal and ethical obligations, not to influence the seller's understanding to facilitate a sale. The broker's duty is to disclose material facts, regardless of whether the seller believes them to be significant. Minimizing the issue without proper disclosure to the buyer is a dereliction of duty. The professional decision-making process for similar situations should involve a clear understanding of fiduciary duties, statutory disclosure requirements, and ethical codes of conduct. When faced with a potential material fact, a professional should always err on the side of transparency and disclosure. This involves 1. Identifying the potential material fact. 2. Understanding its implications for the transaction and all parties involved. 3. Consulting relevant legislation and professional guidelines. 4. Communicating openly and honestly with the client, advising them of their options and the legal/ethical ramifications. 5. Ensuring all required disclosures are made to the buyer. Question 8. Implementation of a new real estate investment trust, REIT, focused on agricultural land in Manitoba, has generated significant interest. A licensed real estate broker in Manitoba, who is advising a client on investment diversification, personally holds a substantial number of units in this specific REIT. The broker believes this REIT is an excellent opportunity for their client, aligning with the client's stated investment goals. What is the most ethically and regulatorily sound approach for the broker to take in this situation? Option A. Recommend the REIT to the client without mentioning their personal holdings, believing their advice is genuinely in the client's best interest and that their personal investment is irrelevant to the client's decision. Option B. Recommend the REIT to the client and disclose their personal holdings only after the client expresses interest in proceeding with the investment. Option C. Immediately disclose their personal REIT holdings to the client, explain the nature of their interest, and confirm that their recommendation is based solely on the client's investment objectives and risk profile, independent of their personal investment. Option D. Recommend a different investment to the client that they believe is suitable, while simultaneously purchasing units in the agricultural REIT for their own portfolio, without informing the client of their personal investment. The correct answer is C. Immediately disclose their personal REIT holdings to the client, explain the nature of their interest, and confirm that their recommendation is based solely on the client's investment objectives and risk profile, independent of their personal investment. Explanation. This scenario presents a professional challenge because it requires a real estate broker to balance their fiduciary duty to a client with the potential for personal gain, while also adhering to the specific regulations governing real estate investment trusts, REIT, in Manitoba. The broker must navigate the complexities of disclosure and avoid any appearance of impropriety or conflict of interest. Careful judgment is required to ensure all actions are transparent and in the client's best interest, as mandated by the Real Estate Services Act of Manitoba and its associated regulations. The best professional approach involves prioritizing full and timely disclosure to the client. This means immediately informing the client about the broker's personal interest in the REIT, the nature of that interest, and how it might be perceived. The broker should then clearly explain that their recommendation is based solely on the client's stated investment objectives and risk tolerance, independent of their personal holdings. This approach upholds the broker's fiduciary duty to act in the client's best interest and aligns with the ethical obligations under the Real Estate Services Act, which emphasizes honesty, integrity, and avoiding conflicts of interest. Transparency is paramount in maintaining client trust and regulatory compliance. An approach that involves recommending the REIT without disclosing the personal interest is ethically and regulatorily unsound. This failure to disclose a material fact, specifically a potential conflict of interest, violates the broker's duty of honesty and integrity under the Real Estate Services Act. It creates an undisclosed conflict that could improperly influence the broker's advice, potentially leading the client to make an investment decision that is not solely in their best interest. Another unacceptable approach would be to recommend the REIT and then disclose the personal interest only after the client has agreed to invest. This is still a failure of timely disclosure. The client should have all material information, including potential conflicts, before making a decision. Delaying disclosure undermines the client's ability to make an informed choice and can be seen as an attempt to circumvent the disclosure requirement, thereby breaching the duty of honesty and integrity. Finally, recommending a different investment to the client and then investing in the REIT themselves without any disclosure to the client is also problematic. While it might seem like they are not directly influencing the client's decision, it still involves a personal investment in a product they are familiar with and potentially could have recommended. If the broker's knowledge of the rate potential performance influenced their decision to recommend a different investment to the client, perhaps to avoid the appearance of conflict, this still raises questions about their motivations and whether they are truly acting in the client's absolute best interest, even if no direct recommendation was made. The core issue remains the lack of transparency regarding their own investment activities in a sector they are professionally involved in. Professionals should adopt a decision-making process that begins with identifying potential conflicts of interest. Once identified, the immediate step should be to assess the materiality of the conflict and its potential impact on the client. Full, frank, and timely disclosure to the client is always the cornerstone of ethical practice. If the conflict cannot be mitigated or waived by the client, the professional must decline to act in the matter. Maintaining client trust and adhering to regulatory requirements for honesty and integrity should always be the guiding principles. Question 9. To address the challenge of a first-time homebuyer in Manitoba expressing concern about the mandatory cost of private mortgage insurance, PMI, on their high loan-to-value mortgage, which of the following actions best upholds the broker's ethical and regulatory obligations? Option A. Suggest the client explore alternative financing options that might not require private mortgage insurance, without fully explaining the potential complexities or regulatory implications of such alternatives. Option B. Clearly explain that private mortgage insurance is a mandatory requirement from the lender due to the loan-to-value ratio, detailing its purpose as lender protection, and that the brokerage has no ability to alter or waive this cost. Option C. Offer to reduce the brokerage commission to offset the cost of the private mortgage insurance, suggesting this as a way to make the purchase more affordable for the client. Option D. Advise the client that private mortgage insurance is a negotiable fee, and that the brokerage can attempt to negotiate a lower rate with the insurer on their behalf. The correct answer is B. Clearly explain that private mortgage insurance is a mandatory requirement from the lender due to the loan-to-value ratio, detailing its purpose as lender protection, and that the brokerage has no ability to alter or waive this cost. Explanation. To address the challenge of ensuring ethical and compliant practices in real estate transactions involving private mortgage insurance, PMI, in Manitoba, a broker faces a situation where a client, a first-time homebuyer, is hesitant about the additional cost of PMI. The client has secured a mortgage with a high loan-to-value ratio, making PMI mandatory under the terms of their mortgage agreement with the lender. The broker's role is to guide the client through this requirement without misrepresenting its nature or necessity, while also upholding their fiduciary duty. The most professionally sound approach involves clearly and comprehensively explaining to the client that private mortgage insurance is a mandatory requirement from the lender due to the loan-to-value ratio, not an optional service offered by the brokerage. This explanation should detail what PMI is, why it is required by the lender, and that the cost is passed on by the lender to protect themselves, not to benefit the brokerage. The broker must emphasize that they cannot waive or negotiate this cost, as it is dictated by the mortgage lender's underwriting policies and provincial mortgage lending regulations. This approach aligns with the Real Estate Services Act of Manitoba and the ethical obligations of a real estate professional to act with honesty, integrity, and in the best interest of their client by providing accurate information and managing expectations transparently. An approach that suggests the brokerage can absorb or reduce the PMI cost is ethically and regulatorily unsound. This would constitute a misrepresentation of the nature of PMI and could be construed as an inducement or rebate, which is prohibited under Manitoba's real estate regulations. It misleads the client about the true cost and source of the PMI requirement. Another unacceptable approach would be to downplay the significance of PMI or suggest it is a negotiable item that the brokerage can influence. This fails to provide accurate information about the lender's requirements and the purpose of PMI, potentially leading the client to believe they have more control over this mandatory cost than they actually do. This undermines the client's understanding and the broker's duty of full disclosure. Furthermore, advising the client to seek alternative financing that might avoid PMI without fully understanding the implications or regulatory compliance of such alternatives is irresponsible. The broker's duty is to explain the current situation and its requirements, not to speculate on or recommend potentially non-compliant or unsuitable financing structures. Professionals should approach such situations by prioritizing clear, factual communication. They must understand the regulatory framework governing mortgage lending and real estate transactions in Manitoba, including the role of mortgage insurers and the prohibitions against inducements. A decision-making process should involve 1. Identifying the client's concern. 2. Recalling the specific regulatory requirements and ethical duties related to the product or service in question. PMI in this case. 3. Explaining the requirement accurately and transparently to the client. 4. Managing client expectations. And 5. Documenting the advice provided. Question 10. Examination of the data shows that an investor client in Winnipeg, Manitoba, is interested in acquiring a distressed property. They propose using a hard money loan with a 15% annual interest rate and a 2-point origination fee, with a balloon payment due in 12 months. The investor also has a secondary option to negotiate seller financing, where the seller would hold a second mortgage for 20% of the purchase price at 8% annual interest, amortized over 10 years with a balloon payment in 5 years. The investor's current financial situation indicates they can service the monthly payments, but would be significantly strained by a large lump sum repayment within a year. The property requires immediate renovations to be marketable. The broker needs to advise the client on the most prudent financing strategy, considering the investor's financial constraints and the property's condition. Option A. Recommend the hard money loan, emphasizing its short-term nature, which allows for quick renovation and resale, and suggest the investor aggressively seek refinancing before the balloon payment is due, despite the higher interest rate and fees. Option B. Advise the investor to seek a traditional mortgage from a chartered bank, even though the property's distressed nature might make it difficult to qualify, as it represents the safest and most regulated financing option. Option C. Suggest the investor take out a personal loan from a non-institutional lender to cover the down payment and renovation costs, thereby simplifying the property financing to a single, potentially unsecured debt. Option D. Advise the investor to proceed with the seller financing option, as it offers a lower interest rate and a longer amortization period, providing more manageable monthly payments and deferring a significant portion of the principal repayment, which aligns better with the investor's stated financial constraints regarding large lump sum obligations. The correct answer is D. Advise the investor to proceed with the seller financing option, as it offers a lower interest rate and a longer amortization period, providing more manageable monthly payments and deferring a significant portion of the principal repayment, which aligns better with the investor's stated financial constraints regarding large lump sum obligations. Explanation. This scenario presents a professional challenge for a Manitoba real estate broker because it requires a nuanced understanding of financing options beyond traditional mortgages, specifically hard money loans and seller financing, and their implications for both the investor and the seller. The broker must ensure that the proposed financing structures are not only financially viable for the investor, but also compliant with the Real Estate Services Act, RESA, and its associated regulations, particularly concerning disclosure, fiduciary duties, and avoiding misrepresentation. The broker's role is to facilitate a transaction that is fair and transparent for all parties, requiring careful due diligence on the financing terms and their suitability. The correct approach involves a thorough analysis of the investor's financial position, the property's market value, and the specific terms of the hard money loan, including interest rates, fees, and repayment schedules. This includes verifying the lender's legitimacy and ensuring the investor fully comprehends the higher risks and costs associated with hard money loans. For seller financing, the broker must ensure proper documentation, including a mortgage or agreement for sale, and that both parties understand their obligations and rights. The broker must also ensure full disclosure of all material facts related to the financing to both the buyer and seller, acting in the best interests of their client, while upholding their duty of honesty and integrity, as mandated by RESA. This approach prioritizes client protection and regulatory compliance. An incorrect approach would be to solely focus on securing the deal for the investor without adequately assessing the risks of the hard money loan. This could lead to the investor defaulting on the loan, potentially resulting in foreclosure and significant financial loss, which would breach the broker's fiduciary duty to act in the client's best interests and could be construed as facilitating a transaction that is not in the client's best interest. Another incorrect approach would be to overlook the complexities of seller financing, such as failing to ensure proper legal documentation is in place or not fully disclosing the implications of the seller retaining a lien on the property. This could lead to disputes and legal challenges, violating RISA requirements for professional conduct and accurate representation. A third incorrect approach would be to advise the investor to misrepresent their financial situation to the hard money lender to secure more favorable terms, which constitutes fraud and a severe breach of ethical and legal obligations. The professional reasoning process for similar situations should involve a systematic evaluation of the proposed financing. This includes understanding the client's financial capacity and risk tolerance, thoroughly researching the terms and implications of any non-traditional financing, ensuring full and transparent disclosure of all material facts and risks to all parties, and consulting with legal counsel when necessary to ensure compliance with all applicable laws and regulations in Manitoba. The broker must always prioritize the integrity of the transaction and the protection of their clients. Question 11. Research into a client's financial situation in Manitoba reveals they are seeking to purchase a property and have expressed a strong desire for the lowest possible initial monthly payments. They are concerned about their current cash flow and want to minimize immediate financial strain. Considering the types of mortgages available, which approach best serves the client's stated needs while upholding professional responsibilities? Option A. Advise them to choose a fixed-rate mortgage with the longest possible term, explaining that this offers payment stability, even if the initial payments are higher than other options. Option B. Immediately recommend an interest-only mortgage, emphasizing its significantly lower initial payments, as this directly addresses their primary concern. Option C. Provide a detailed explanation of fixed-rate, adjustable rate, and interest-only mortgages, discussing the pros and cons of each in relation to their stated goal of lower initial payments, and then guide them to select the option that best aligns with their overall financial picture and risk tolerance after a thorough discussion. Option D. Suggest an adjustable rate mortgage with a low introductory rate, highlighting how this will provide the lowest initial payments and can be refinanced later if rates increase. The correct answer is C. Provide a detailed explanation of fixed rate, adjustable rate, and interest-only mortgages, discussing the pros and cons of each in relation to their stated goal of lower initial payments, and then guide them to select the option that best aligns with their overall financial picture and risk tolerance after a thorough discussion. Explanation. This scenario presents a professional challenge because it requires the real estate broker to act as a trusted advisor, balancing the client's immediate financial concerns with the long-term implications of their mortgage choice. The broker must ensure the client fully understands the risks and benefits of each mortgage type, not just the one that appears most attractive initially. Careful judgment is required to avoid steering the client towards a product that may not be in their best interest, even if it seems to meet their stated short-term goals. The best approach involves thoroughly educating the client on the fundamental differences between fixed rate, adjustable rate, and interest-only mortgages, specifically within the context of Manitoba's real estate market and lending practices. This includes explaining how interest rate fluctuations impact payments on adjustable rate mortgages and the principal repayment structure, or lack thereof, for interest-only mortgages. The broker should then facilitate a discussion where the client articulates their financial goals, risk tolerance, and long-term plans, allowing the broker to guide them towards the mortgage type that best aligns with these factors. This approach is correct because it prioritizes informed consent and client well-being, adhering to the ethical duty of care and the regulatory requirement to act in the client's best interest, as outlined by the Real Estate Services Act of Manitoba and its associated regulations. Providing comprehensive, unbiased information empowers the client to make a decision that suits their unique circumstances. An incorrect approach would be to immediately recommend an interest-only mortgage simply because the client expressed a desire for lower initial payments. This fails to adequately address the significant risk of not building equity and the potential for payment shock when principal repayment begins, or if interest rates rise on a variable rate component. This could contravene the broker's duty to ensure the client understands the full implications of their financial commitments. Another incorrect approach would be to push for a fixed-rate mortgage without understanding the client's long-term plans or risk tolerance. While often perceived as safer, A fixed-rate mortgage might not be the most suitable option if the client anticipates selling the property within a few years and wishes to minimize upfront costs, or if they are comfortable with potential payment fluctuations in exchange for a lower initial rate. This could be seen as a failure to provide tailored advice. Finally, recommending an adjustable rate mortgage solely based on its current lower interest rate, without a detailed discussion about the potential for future rate increases and their impact on affordability, is also professionally unsound. This overlooks the inherent risk associated with variable rates and could lead to financial hardship for the client if rates rise significantly. The professional reasoning process should involve a structured client needs assessment. This begins with active listening to understand the client's stated needs and concerns. It then moves to providing clear, unbiased education on relevant product types, highlighting their respective advantages and disadvantages in the Manitoba context. Following this, the broker should facilitate a discussion to uncover the client's underlying financial goals, risk appetite, and future plans. Only after this comprehensive understanding is established should the broker offer guidance on which mortgage type appears to be the most suitable fit, always emphasizing that the final decision rests with the client. Question 12. Which approach would be most appropriate for a real estate broker in Manitoba when a prospective client expresses a desire to find a new home, and the broker suspects the client's family status might influence their housing needs? Option A. Suggests that a client with a young child might be better suited to a different type of building based on the broker's personal opinion about noise levels. Option B. Directly ask the client about their family status to better understand their housing requirements. Option C. Refuse to show properties in a particular neighborhood because the broker assumes it might not be suitable for the client based on their perceived ancestry. Option D. Focus on understanding the client's stated needs and preferences regarding property features, location, and budget. And if the client voluntarily discloses information related to a protected ground that impacts functional requirements, address those specific functional needs. The correct answer is D. Focus on understanding the client's stated needs and preferences regarding property features, location, and budget. And if the client voluntarily discloses information related to a protected ground that impacts functional requirements, address those specific functional needs. Explanation. This scenario presents a professional challenge because it requires a real estate broker to navigate a sensitive situation involving a potential client's personal characteristics while upholding fair housing principles. The broker must balance the need to understand a client's needs and preferences with the absolute prohibition against discrimination based on protected grounds. Misjudging this balance can lead to significant legal repercussions and ethical breaches. The best approach involves actively listening to the client's stated needs and preferences without making assumptions or inquiries about protected characteristics. If the client voluntarily discloses information related to a protected ground that might influence their housing choice, e.g., needing accessible features due to a disability, the broker should acknowledge this information and focus on finding properties that meet those functional needs, such as specific accessibility features or proximity to certain services, rather than dwelling on the protected characteristic itself. This aligns with the Manitoba Human Rights Code, which prohibits discrimination in housing based on grounds including disability, family status, and ancestry. The focus remains on the objective requirements of the property and the client's ability to use it, not on the client's identity. An incorrect approach would be to directly ask the client about their family status to gauge their housing needs. This is problematic because it directly probes a protected ground under the Manitoba Human Rights Code. Even if the intention is to find suitable housing, such direct questioning can be perceived as discriminatory and can lead to steering clients towards or away from certain areas or types of housing based on assumptions about their family structure, which is a violation of fair housing laws. Another incorrect approach would be to refuse to show properties in a particular neighborhood because the broker assumes it might not be suitable for a client based on their perceived ancestry. This is a clear case of steering, which is prohibited under fair housing legislation. The broker is making a discriminatory judgment based on a protected characteristic and limiting the client's housing options without their explicit instruction or objective need. Finally, an incorrect approach would be to suggest that a client with a young child might be better suited to a different type of building based on the broker's personal opinion about noise levels. This is also a form of steering and discrimination based on family status. The broker's role is to present all available options that meet the client's stated criteria, not to impose personal biases or assumptions about how a client should live based on their family composition. Professionals should employ a decision-making framework that prioritizes understanding the client's explicit housing requirements and preferences. This involves active listening and asking open-ended questions about needs such as number of bedrooms, proximity to amenities, budget, and desired features. If a protected characteristic is voluntarily disclosed and directly relates to a functional need for the property, e.g., accessibility features for a disability, the broker should focus on meeting that functional need objectively. Any inquiry or action that could be construed as making assumptions, steering, or limiting options based on protected grounds must be avoided. The guiding principle is to treat all clients equally and provide access to housing opportunities without prejudice. Question 13. System analysis indicates that a Manitoba real estate broker is advising a client on the potential purchase of a residential property in Winnipeg. The broker has observed a recent uptick in property sales and a slight increase in average sale prices over the past quarter. Considering the cyclical nature of real estate, which of the following approaches best represents a comprehensive risk assessment for providing advice to the client? Option A. Conduct a thorough analysis of current Winnipeg market data, historical sales trends within Manitoba, and relevant provincial economic indicators to identify potential risks and opportunities. Option B. Rely heavily on national real estate market forecasts and general economic theories of market cycles, without specific consideration for Manitoba's unique economic drivers. Option C. Base the advice primarily on anecdotal feedback from other real estate agents in Winnipeg regarding their recent experiences and personal opinions on market direction. Option D. Advise the client to wait for a more definitive national market trend to emerge, disregarding current local sales activity and historical Manitoba data. The correct answer is A. Conduct a thorough analysis of current Winnipeg market data, historical sales trends within Manitoba, and relevant provincial economic indicators to identify potential risks and opportunities. Explanation. Scenario analysis. This scenario presents a professional challenge for a Manitoba real estate broker due to the inherent volatility and cyclical nature of the real estate market. Brokers have a fiduciary duty to their clients and must provide advice that is in their best interest, which includes understanding and communicating market trends. Failing to accurately assess and communicate these trends can lead to poor investment decisions for clients, potential financial losses, and damage to the broker's reputation and license. The challenge lies in distinguishing between short-term fluctuations and long-term trends, and in providing actionable, well-reasoned advice based on available data and professional judgment, all within the regulatory framework of Manitoba. Correct approach analysis. The best professional practice involves a comprehensive risk assessment that integrates current market data, historical trends specific to Manitoba, and economic indicators relevant to the province. This approach requires the broker to analyze factors such as interest rates, employment figures, population growth, and local development projects that influence real estate values in Manitoba. By synthesizing this information, the broker can identify potential risks and opportunities, allowing for informed advice to clients regarding property acquisition, disposition, or investment strategies. This aligns with the Manitoba Real Estate Services Act and its associated regulations, which mandate that registrants act with honesty, integrity, and in the best interests of their clients, including providing competent advice based on market knowledge. Incorrect approaches analysis. Relying solely on anecdotal evidence from recent sales or personal opinions of other agents, without rigorous data analysis, is professionally unacceptable. This approach lacks the objective foundation required for sound advice and can lead to misinformed client decisions based on potentially biased or incomplete information. Fails to meet the standard of care expected of a licensed broker. Adopting a purely speculative approach based on generalized national real estate forecasts, without considering the specific economic and demographic nuances of Manitoba, is also problematic. While national trends can be informative, local market conditions can differ significantly. This approach risks providing advice that is not tailored to the client's specific Manitoba context, potentially leading to suboptimal outcomes and a breach of the broker's duty to provide relevant and specific advice. Ignoring current market data and historical Manitoba trends altogether, and instead focusing solely on long-term, theoretical economic cycles, is an abdication of professional responsibility. While understanding theoretical cycles is valuable, a broker must ground their advice in the present reality of the local market to effectively guide clients through immediate decisions and mitigate current risks. This approach fails to provide timely and practical guidance. Professional reasoning. Professionals should employ a systematic approach to risk assessment in real estate. This involves 1. Data gathering, collecting relevant market data, sales, listings, inventory levels, economic indicators, employment, interest rates, inflation, and demographic information specific to the Manitoba region. 2. Trend analysis, identifying patterns and shifts in the data, distinguishing between short-term noise and long-term trends. 3. Risk identification, pinpointing potential threats and opportunities based on the analyzed trends and their implications for property values and client objectives. 4. Scenario planning, developing potential future market scenarios and their impact on client investments. 5. Client-specific advice, tailoring recommendations to the client's individual financial situation, risk tolerance, and investment goals, ensuring all advice is compliant with Manitoba real estate regulations. Question 14. Strategic planning requires a robust framework for financial management. In Manitoba, a real estate broker discovers a significant discrepancy between their trust account bank statement and their internal ledger for the past quarter. The broker is concerned about potential reporting errors and the implications for client trust funds. Which of the following actions best addresses this situation in compliance with Manitoba's real estate regulations and ethical standards? Option A. Adjust the internal ledger to match the bank statement balance without investigating the specific transaction differences to expedite the reporting process. Option B. Postpone addressing the discrepancy until the Manitoba Real Estate Association initiates an inquiry, hoping the issue resolves itself or can be explained later. Option C. Provide the Manitoba Real Estate Association with a general overview of trust account activity for the quarter, omitting specific details about the discrepancy. Option D. Immediately initiate a detailed reconciliation of the trust account, cross-referencing all transactions with supporting documentation and client agreements, and prepare a comprehensive report for the Manitoba Real Estate Association. The correct answer is D. Immediately initiate a detailed reconciliation of the trust account, cross-referencing all transactions with supporting documentation and client agreements, and prepare a comprehensive report for the Manitoba Real Estate Association. Explanation. Scenario analysis. This scenario presents a common challenge in real estate brokerage operations in Manitoba, ensuring accurate and timely financial reporting while managing the complexities of trust account reconciliation and client communication. The professional challenge lies in balancing the broker's fiduciary duty to clients, the legal requirements for trust account management under the Real Estate Services Act, Manitoba, and its associated regulations, and the operational demands of running a brokerage. Mismanagement of financial records can lead to serious regulatory breaches, loss of client trust, and potential disciplinary action from the Manitoba Real Estate Association, MREA. The broker must demonstrate diligence, transparency, and adherence to strict record-keeping standards. Correct approach analysis. The best professional approach involves immediately initiating a thorough review of all trust account transactions for the period in question, cross-referencing them with the brokerage's internal ledgers and client agreements. This proactive step ensures that any discrepancies are identified and rectified promptly. The broker should then prepare a detailed reconciliation report, clearly outlining all deposits, withdrawals, and outstanding balances, and provide this report to the MREA as required by their reporting obligations. This approach directly aligns with the requirements of the Real Estate Services Act and the MREA guidelines, which mandate accurate trust account management and timely reporting to the regulatory body. It demonstrates a commitment to transparency, accountability, and the protection of client funds, fulfilling the broker's fiduciary and legal obligations. Incorrect approaches analysis. Delaying the reconciliation and reporting process until a formal inquiry is initiated by the MREA is a significant regulatory failure. This inaction suggests a lack of diligence and could be interpreted as an attempt to conceal potential issues, violating the principles of transparency and accountability. It also increases the risk of compounding errors and makes subsequent reconciliation more difficult. Attempting to reconcile the trust account by simply adjusting the internal ledger to match the bank statement without investigating the underlying transaction discrepancies is also professionally unacceptable. This approach circumvents the purpose of reconciliation, which is to verify the accuracy of all transactions and ensure that client funds are managed appropriately. It fails to identify and correct errors in the brokerage record-keeping, potentially leading to misrepresentation of financial status and breaches of trust. Providing a generalized summary of trust account activity without specific transaction details or a formal reconciliation report to the MREA is insufficient. The MREA requires detailed and accurate financial records to ensure compliance with the Real Estate Services Act. A vague report does not meet these regulatory standards and fails to provide the necessary assurance that client funds are being managed correctly. Professional reasoning. Professionals in Manitoba's real estate industry must adopt a proactive and meticulous approach to financial management. When faced with potential discrepancies or reporting challenges, the decision-making process should prioritize immediate investigation and accurate documentation. This involves 1. Recognizing the fiduciary duty to clients and the legal obligations under the Real Estate Services Act and MREA regulations. 2. Prioritizing the integrity of trust accounts above all else. 3. Initiating prompt internal reviews and reconciliations. 4. Maintaining detailed and accurate records as mandated by law. 5. Communicating transparently and proactively with the regulatory body when required. This systematic approach ensures compliance, protects client interests, and upholds the reputation of the brokerage and the profession. Question 15. The assessment process reveals that client is interested in purchasing a property in Winnipeg, Manitoba, with the intention of operating a small home-based business. The real estate agent has identified the property's current zoning designation, but has not thoroughly investigated the specific bylaws governing home-based businesses within that zone. Which of the following approaches best ensures the agent fulfills their professional obligations? Option A. Proactively investigate the specific municipal bylaws for home-based businesses within the property's zoning designation and clearly communicate any restrictions or requirements to the client. Option B. Assume that if the property has been used for residential purposes, any home-based business is permitted under the current zoning. Option C. Only disclose the property's zoning designation and inform the client that they are responsible for researching all applicable bylaws related to their intended use. Option D. Advise the client to contact the City of Winnipeg Planning Department directly to inquire about home-based business regulations, without providing any initial guidance. The correct answer is A. Proactively investigate the specific municipal bylaws for home-based businesses within the property's zoning designation and clearly communicate any restrictions or requirements to the client. Explanation. The assessment process reveals a common challenge in real estate transactions involving properties subject to specific zoning bylaws, ensuring full disclosure and adherence to municipal land use regulations. This scenario is professionally challenging because a real estate agent's fiduciary duty to their client, whether buyer or seller, requires them to act with honesty, integrity, and competence. Misinterpreting or failing to adequately investigate zoning bylaws can lead to significant legal and financial repercussions for the client and damage the agent's reputation and license. Careful judgment is required to navigate the complexities of municipal bylaws and ensure all parties are fully informed. The correct approach involves proactively investigating and clearly communicating the implications of the applicable zoning bylaws to the client. This means not just identifying the current zoning, but understanding its restrictions and potential impacts on the client's intended use or the property's marketability. For a seller, this might involve advising them on any non-conforming uses or required permits for existing structures. For a buyer, it means thoroughly explaining how the zoning affects their plans for renovation, expansion, or specific business operations. This approach is correct because it aligns with the Manitoba Real Estate Association's Code of Ethics and the Real Estate Services Act, which mandate competence, honesty, and the duty to inform clients of all material facts, including those related to land use and zoning. It prioritizes client protection and informed decision-making. An incorrect approach would be to assume the existing use is permitted without verification. This fails to acknowledge the agent's responsibility to conduct due diligence. Municipal zoning bylaws can change, and existing uses may be grandfathered or subject to specific conditions that are not immediately apparent. Relying on assumptions can lead to a client making a purchase or sale based on incomplete or inaccurate information, potentially resulting in costly legal disputes or the inability to use the property as intended. Another incorrect approach is to delegate the responsibility of understanding zoning entirely to the client. While clients have a responsibility to make their own decisions, the real estate agent is the professional expert in the transaction. Shifting the burden of understanding complex municipal bylaws to an uninformed client is a dereliction of professional duty. The agent must provide clear, understandable information and guidance, not simply point the client towards the municipal office without further explanation or context. A further incorrect approach would be to only disclose zoning information if specifically asked by the client. Material facts, such as zoning restrictions that could significantly impact the value or usability of a property, must be proactively disclosed. Waiting for a client to inquire about zoning is a passive approach that risks overlooking critical information that the client may not even know to ask about. This failure to proactively inform can be considered a breach of the agent's duty of care. Professional reasoning in such situations should follow a framework of proactive investigation, clear communication, and client-centric advice. Professionals should always assume a need for due diligence regarding zoning and land use. This involves not only identifying the zoning designation, but also understanding its implications for the specific transaction. Communication should be clear, concise, and tailored to the client's understanding, ensuring they are fully informed of any restrictions, requirements, or potential challenges related to zoning. When in doubt, consulting with municipal planning departments or seeking legal advice is a sign of professional competence and ethical practice. Question 16. The risk matrix shows a moderate likelihood of a mortgage application being delayed due to the buyer's recent significant debt consolidation. As a real estate broker in Manitoba, what is the most prudent course of action to ensure a smooth transaction while upholding professional standards? Option A. Downplay the significance of the debt consolidation to the buyer, assuring them that most lenders are flexible and it is unlikely to cause a significant issue. Option B. Advise the buyer to be completely transparent with their mortgage broker about the debt consolidation and offer to facilitate communication between the buyer and their mortgage broker to ensure all necessary documentation is provided accurately and promptly. Option C. Suggest to the buyer that they might consider omitting the details of the debt consolidation from their mortgage application to expedite the process. Option D. Inform the buyer that mortgage approval is solely their responsibility and that the real estate transaction will proceed regardless of any potential mortgage complications. The correct answer is B. Advise the buyer to be completely transparent with their mortgage broker about the debt consolidation and offer to facilitate communication between the buyer and their mortgage broker to ensure all necessary documentation is provided accurately and promptly. Explanation. This scenario is professionally challenging because it requires a real estate broker in Manitoba to balance the client's immediate desire for a quick sale with the legal and ethical obligations to ensure the mortgage application process is transparent and compliant with the Real Estate Services Act and its associated regulations. The broker must act in the best interest of their client, while also upholding the integrity of the mortgage lending process and avoiding any misrepresentation. Careful judgment is required to navigate the potential for undue influence or misleading information that could jeopardize the mortgage approval. The best approach involves proactively advising the client on the importance of accurate disclosure to the lender and offering to facilitate communication with the mortgage broker or lender to ensure all necessary documentation is provided truthfully. This approach is correct because it aligns with the broker's fiduciary duty to the client, which includes providing honest and competent advice. Furthermore, it adheres to the principles of fair dealing and transparency mandated by the Real Estate Services Act, which requires registrants to act honestly and in good faith with all parties in a transaction. By encouraging open communication and accurate disclosure, the broker helps prevent potential issues that could arise from a mortgage application based on incomplete or misleading information, thereby protecting both the client and the integrity of the transaction. An approach that involves downplaying the significance of the client's financial situation to the lender, or suggesting the client omit certain details from the mortgage application, is incorrect. This constitutes misrepresentation and a failure to act honestly and in good faith, violating the Real Estate Services Act. Such actions could lead to mortgage fraud, severe penalties for the client, and disciplinary action against the broker, including license suspension or revocation. Another incorrect approach is to simply proceed with the sale without addressing the mortgage application concerns, assuming the client will handle it independently. This fails to meet the broker's obligation to provide competent service and advice. The broker has a responsibility to ensure that all aspects of the transaction, including those that directly impact the client's ability to complete the purchase, are handled appropriately and ethically. A professional reasoning framework for this situation would involve 1. Identifying the client's stated goal, quick sale, and potential obstacles, mortgage approval challenges. 2. Recalling the broker's legal and ethical obligations under the Real Estate Services Act and its regulations, particularly regarding honesty, good faith, and client best interests. 3. Assessing the potential risks associated with the client's financial situation and the mortgage application process. 4. Developing a strategy that prioritizes accurate disclosure and transparent communication with the lender, while also supporting the client's objectives. 5. Clearly communicating advice and expectations to the client, ensuring they understand the importance of full and truthful disclosure to the mortgage lender. Question 17. The risk matrix shows a potential for conflicting interests when a real estate agent in Manitoba is asked to represent both the seller of a property and a prospective buyer who has expressed strong interest in that same property. Which of the following actions best navigates this complex agency situation according to Manitoba's real estate regulations and ethical standards? Option A. Inform the seller that dual agency is not permissible and suggest they find another agent, while continuing to represent the buyer exclusively. Option B. Prioritize the interests of the buyer, as they are the party bringing new business, and subtly guide them towards a favorable deal while still technically representing the seller. Option C. Proceed with representing both parties without explicitly mentioning the dual agency, assuming that as long as no confidential information is shared, the situation is manageable. Option D. Fully disclose the dual agency situation to both the seller and the buyer, clearly outlining the potential conflicts of interest and obtaining their informed, written consent to proceed with representing both parties impartially. Correct answer is D. Fully disclose the dual agency situation to both the seller and the buyer, clearly outlining the potential conflicts of interest and obtaining their informed, written consent to proceed with representing both parties impartially. Explanation. This scenario is professionally challenging because it presents a conflict of interest inherent in dual agency, requiring a real estate professional to navigate competing fiduciary duties. The agent must balance the interests of both the seller and the buyer, which can be difficult when those interests diverge, such as on price or terms. Careful judgment is required to ensure fair dealing and avoid any perception of favoritism or undisclosed information. The best professional approach involves full disclosure and obtaining informed consent from all parties involved. This means clearly explaining the nature of dual agency, the potential conflicts of interest, and how the agent will manage these conflicts. The agent must commit to representing both parties impartially, without favoring one over the other, and must not disclose confidential information learned from one party to the other without explicit consent. This aligns with the principles of the Real Estate Services Act, Manitoba, and the ethical obligations of real estate professionals in Manitoba to act with honesty, integrity, and in the best interests of their clients, while also adhering to the specific rules governing agency relationships. An incorrect approach would be to proceed with representing both parties without fully disclosing the dual agency situation and obtaining explicit, informed consent. This failure to disclose is a direct violation of the agent's duty of honesty and transparency, as mandated by the Real Estate Services Act, Manitoba. Another incorrect approach is to prioritize the interests of one party over the other once dual agency is established. This breaches the fiduciary duty owed to the party whose interests are being compromised and can lead to legal and ethical repercussions. Finally, continuing to represent both parties while selectively sharing information or advising one party on how to exploit weaknesses of the other is a severe ethical breach and a violation of the agent's duty of loyalty and confidentiality to both clients. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest. Upon recognizing a situation that could lead to dual agency, the professional must immediately assess the feasibility of managing such a relationship ethically and legally. This involves a thorough review of the Real Estate Services Act, Manitoba, and any relevant professional guidelines. The next step is to engage in open and transparent communication with all parties, explaining the implications of dual agency and obtaining written, informed consent. If consent is not obtained, or if the professional believes they cannot adequately represent both parties without compromising their duties, they should decline to act as a dual agent and advise the parties accordingly. Question 18. Risk assessment procedures indicate that a property listed by a Manitoba real estate broker had a significant flooding incident 2 years prior, which has since been professionally repaired and remediated. The seller client has instructed the broker not to mention the past flooding to potential buyers, stating that it is a resolved issue and they do not want it to deter interest. The broker is now preparing to market the property and is considering how to handle this information. Which of the following represents the most appropriate course of action for the broker in Manitoba? Option A. Advise the seller that the property has no known issues and rely on the seller's assurance that the repairs are complete. Option B. Only disclose the flooding if a buyer's offer includes a condition for a home inspection that might reveal evidence of past water damage. Option C. Proactively disclose the past flooding incident and the subsequent repairs to all prospective buyers and their agents. Option D. Wait for a buyer to specifically inquire about past water damage or structural issues before disclosing the flooding. Correct answer is C. Proactively disclose the past flooding incident and the subsequent repairs to all prospective buyers and their agents. Explanation. This scenario presents a professional challenge because it requires the broker to balance the fiduciary duty owed to their client with the legal and ethical obligations to disclose material facts. The broker must act in the best interests of their seller client, while also ensuring transparency and fairness to potential buyers. As mandated by Manitoba real estate law and professional conduct rules, the broker's knowledge of the previous flooding, even if repaired, constitutes a material fact that could influence a buyer's decision and perceived value of the property. The best approach involves proactively disclosing the past flooding incident to all prospective buyers and their agents. This aligns with the broker's duty of honesty and integrity, as well as the specific disclosure requirements under Manitoba's Real Estate Services Act and the Real Estate Brokers Act, Manitoba. By providing this information upfront, the broker allows buyers to make informed decisions, conduct their own due diligence, such as obtaining independent inspections, and negotiate accordingly. This transparency fosters trust and mitigates the risk of future disputes or legal challenges related to non-disclosure. It also upholds the principle of fair dealing with all parties involved in a transaction. An approach that involves waiting for a buyer to specifically ask about past water damage is ethically and legally deficient. This passive stance risks violating the broker's duty to disclose material facts, as the past flooding is a significant aspect of the property's history that a reasonable buyer would want to know. Failing to disclose this proactively could be construed as misleading or deceptive conduct, potentially leading to a breach of contract, legal action, and disciplinary proceedings by the Manitoba Real Estate Association. Another unacceptable approach would be to only disclose the flooding if the buyer's offer is conditional on a home inspection that might uncover evidence of past water damage. This approach is reactive and still fails to provide full transparency at the outset of the marketing process. It prioritizes the seller's desire to potentially secure a sale without full disclosure over the buyer's right to complete and accurate information. This can lead to a situation where a buyer feels deceived once the information comes to light, even if it's discovered during the inspection period. Finally, advising the seller to simply state that the property has no known issues without mentioning the past flooding is a direct violation of the broker's disclosure obligations. This is an attempt to circumvent the duty to disclose material facts and could be seen as actively participating in misrepresentation. Such an action would expose both the seller and the broker to significant legal and professional repercussions, including potential lawsuits, loss of license, and severe damage to their reputations. Professionals should approach such situations by prioritizing transparency and adherence to regulatory requirements. A robust risk assessment should always include identifying and evaluating material facts about a property. The decision-making process should then focus on how best to disclose these facts ethically and legally, ensuring all parties have the necessary information to make informed decisions. When in doubt, consulting with the Manitoba Real Estate Association or legal counsel is advisable. Question 19. Operational review demonstrates that a real estate broker in Manitoba is representing a seller. During a pre-listing inspection, the broker notices a significant crack in the foundation that the seller claims is merely cosmetic and has been there for years without issue. The seller is eager to sell quickly and asks the broker to not mention the crack to potential buyers, suggesting they simply paint over it before showings. What is the most appropriate course of action for the broker? Option A. Tell the seller to simply state no known foundation issues if asked directly by a potential buyer, as the crack is not actively causing problems. Option B. Advise the seller of their legal obligation to disclose all known material latent defects, including the foundation crack, and explain the potential legal and ethical consequences of non-disclosure or concealment. Option C. Agree with the seller to market the property without mentioning the foundation issue, relying on the buyer's home inspection to reveal the problem. Option D. Advise the seller to paint over the crack to make it less noticeable and proceed with marketing the property without mentioning the foundation issue. The correct answer is B. Advise the seller of their legal obligation to disclose all known material latent defects, including the foundation crack, and explain the potential legal and ethical consequences of non-disclosure or concealment. Explanation. Scenario analysis. This scenario is professionally challenging because it involves a potential conflict of interest and a breach of fiduciary duty. A real estate broker in Manitoba has a legal and ethical obligation to act in the best interests of their client, the seller. Misrepresenting the property's condition or failing to disclose material facts can lead to significant legal repercussions, including lawsuits from the buyer and disciplinary action from the Manitoba Real Estate Association, MREA. The broker must navigate the seller's desire to sell quickly with the legal requirement for full and honest disclosure. Correct approach analysis. The best professional practice involves the broker advising the seller that they have a legal obligation under Manitoba's Real Estate Services Act and its associated regulations to disclose all known material latent defects to potential buyers. This includes advising the seller that attempting to conceal or downplay the foundation issue would be a violation of their fiduciary duty and could lead to legal liability for both the seller and the brokerage. The broker should then document this advice thoroughly, and if the seller refuses to disclose, consider withdrawing from representing the seller to avoid complicity in a misrepresentation. This approach upholds the principles of honesty, integrity, and the duty of care owed to all parties in a real estate transaction, as mandated by provincial legislation and MREA Code of Ethics. Incorrect approaches analysis. Advising the seller to simply state no known foundation issues without disclosing the observed crack is a direct violation of the duty to disclose material latent defects. This constitutes misrepresentation and can lead to legal action by the buyer and disciplinary proceedings. Suggesting the seller paint over the crack to make it less visible before the showing is a form of active concealment. This is unethical and illegal, as it deliberately attempts to mislead a potential buyer about a significant property defect. Agreeing to market the property without mentioning the foundation issue and hoping the buyer doesn't discover it during their own inspections is negligent. While not actively lying, the broker has a duty to ensure material facts are disclosed, and passive omission in this context is a breach of that duty. Professional reasoning. Professionals should employ a decision-making framework that prioritizes legal compliance and ethical conduct. When faced with a situation where a client's instructions conflict with legal obligations or ethical standards, the professional must first identify the relevant legislation and ethical codes. They should then clearly and unequivocally advise the client of their legal and ethical responsibilities. If the client insists on proceeding in a manner that violates these obligations, the professional must be prepared to refuse to participate and, if necessary, withdraw from the engagement, documenting all communications and advice provided. Question 20. Quality control measures reveal a potential discrepancy in the calculation of ownership shares for a property in Winnipeg, Manitoba, held under tenancy in common by 3 individuals: Alex, Ben, and Chloe. Alex contributed $150,000, Ben contributed $100,000, and Chloe contributed $50,000 towards the initial purchase price of $300,000. What is the correct proportionate ownership share for each individual, and what is the total equity each holds if the property is currently valued at $450,000? Option A. Alex, 60% $270,000, Ben, 30% $135,000, Chloe, 10% $45,000. Option B. Alex, 50% $225,000, Ben, 25% $112,500, Chloe, 25% $112,500. Option C. Alex, 33% $150,000, Ben, 33% $150,000, Chloe, 33% $150,000. Option D. Alex, 50% $225,000, Ben, 33% $150,000, Chloe, 16% 67% $75,000. The correct answer is D. Alex, 50% $225,000, Ben, 33% $150,000, Chloe, 16% 67% $75,000. Explanation: scenario analysis. This scenario presents a professional challenge due to the potential for misinterpretation of ownership structures and their financial implications, particularly when dealing with multiple parties and differing contributions. A real estate professional must accurately assess and communicate the nature of ownership to ensure all parties understand their rights and responsibilities, and to facilitate accurate financial calculations for transactions. Failure to do so can lead to disputes, legal complications, and financial losses. Correct approach analysis. The best professional practice involves accurately calculating each party's proportionate share of ownership based on their initial investment, as this directly reflects their contribution to the acquisition of the property. In Manitoba, under the principles of tenancy in common, ownership shares are not presumed to be equal and can be determined by the parties' respective contributions. This approach ensures that the division of equity and any subsequent proceeds from sale or refinancing accurately reflects the financial commitment of each individual, aligning with the legal framework of tenancy in common, where distinct ownership interests can be held. Incorrect approaches analysis. One incorrect approach is to assume equal ownership shares simply because there are 3 individuals involved. This fails to acknowledge that tenancy in common allows for unequal shares and ignores the documented financial contributions of each party. This could lead to an unfair distribution of equity and potential legal challenges. Another incorrect approach is to allocate ownership based solely on the largest single contribution without considering the other investments. This method disregards the principle that all contributions, regardless of size, should be factored into determining proportionate ownership. It would unjustly benefit one party at the expense of the others. A further incorrect approach is to divide ownership based on the number of years each individual has been involved with the property, without regard to their financial investment. While time can be a factor in some contexts, in property ownership, especially under tenancy in common, financial contribution is the primary determinant of ownership share. This approach would misrepresent the actual equity held by each party. Professional reasoning. Professionals should always prioritize understanding the specific legal framework governing the property's ownership, in this case, tenancy in common in Manitoba, and the documented financial contributions of each party. A systematic approach involving clear documentation of investments, calculation of proportionate shares using a formula like the one presented, and transparent communication with all stakeholders is crucial. When faced with differing contributions, the default assumption of equal shares is inappropriate. Instead, a detailed calculation based on actual investment is required.